Yo guys, and welcome back towards this new stream here on the channel. And on today's stream, I'm going to talk about the Federal Reserve meeting. I'm going to sit down right now, and today, guys, is going to be a very important day. So make sure to sit back right now because the Federal Reserve meeting is going to get started here in approximately 45 minutes. But right now, before we going to go and start up the meeting, I would like to, of course, talk a little bit about Bitcoin, talk a little bit about the expectations we're currently having, and also I'm going to talk about the levels where I am currently going to be, of course, accumulate a little bit of Bitcoin at. I've set up some limit orders right now here where I will be buying in towards Bitcoin. Of course, people that are following me right in my Telegram group already do know that, but I'm currently setting up some levels because Bitcoin could be creating some nasty scam wicks later today, once of course the Federal Reserve is going to exactly announce what the interest rates are going to be here. So guys, make sure to slap up that like button right now on today's video, on today's live stream. Subscribe to the channel if you haven't already, and of course don't forget to also put up the bell notification button so you're definitely not going to be missing out on any of these updates we're basically bringing out on the channel. So later today, we're going to talk, and of course, later today, in a moment from now on, 45 minutes from now on, we're going to basically showcase you guys exactly what is currently going down on the meeting. I'm going to, of course, basically look at the meeting myself as well with you guys together. And we're going to also look at the price action. How is it going to be affecting the price action? So this is going to get started in approximately 45 minutes from now on. So before of that, and before talking about the meeting, let's quickly talk about the price action of Bitcoin, right? So right now, Bitcoin, its price action has been coming down even furthermore, right? We have been starting to create, of course, that bullish divergence on the market right now. We're forming, of course, a higher low right now on the 1 hour time frame. And of course, we're forming a lower low on the 1 hour time frame as well. And I was talking about the higher low on the RSI. So we're creating right now a little bit of a momentum divergence. Could be, of course, a positive effect, but in the end of the day, I don't think it will be mattering all too much because, what will be matter all too much today is whether we're going to get that, 75 basis point hike, or whether we're going to get a 100 basis point hike. Because later today, guys, everything can still happen. And of course, I personally think that if we're going to get a 75 basis point hike, that the markets are not necessarily going to crash massively. I personally think it's going to be neutral. We can go up, we can go down. But 75 basis points, in my opinion, is already priced in towards the market. So if we get 75 basis points, I think the more likely scenario that in a day or in a few hours after the meeting and after he publicly told us that it's going to be 75 basis points, we're going to go up again here. Is it going to be below 75 basis points? So let's say it's only going to be 50, maybe going to be 25, but I don't expect it. I expect 50, 75, or 100, and most likely it's going to be 75. But if in case we're going to get 50, we're of course going to create a massive pump on the market. And of course also, guys, if we're going to see 100, it could be of course a very nasty day for crypto and also for the equity market. So please, today is going to be of course an extremely important day. It is time to be focusing on the markets right now here. So let's talk a little bit about the market right now and how we're basically looking in front of it right here. So 1 hour time frame, guys, everything can still happen. I'm not going to do necessarily any momentum and analysis or whatsoever, because in the end of the day, it's going to be not matter all too much here. Also 4 hour time frame, we're creating a bullish divergence, but we can come down way more, depending of course on what the meeting is going to tell us. Right now on the daily time frame, we can see, of course, that the Storch RSI is forming a bullish crossover, is about to form a bullish crossover, I should say. And if we're going to look back at what it basically previously around did here, it formed a bullish crossover on this candle over here, it formed a bullish crossover over here, and basically, of course, pointing out every single time it did happen. So, of course, historically looking at these levels, and once we're creating a bullish crossover on the Storch RSI, it tends to be showing us, of course, some imminent short-term price push towards the upside. However, of course, we don't necessarily have to be moving up from off this point. But there's definitely some more upside potential that, actually, this was the crossover here. And this was also actually the crossover here. So, there is, of course, some potential upside to come for Bitcoin if we're once again crossing bullish on the Storch RSI in the daily time frame. Maybe we're going to get a little bit of a bounce here. But on the bigger picture, we're clearly trading in a downtrend, of course. What I truly hope for is maybe a move back up here to $28,000, and that is going to be, of course, an interesting range to look either at short positions for another continuation of a lower high, because so far, yeah, we've been not really forming a new high in the market, and I'm not talking about a higher high, but a lower high, and that is, of course, the real big shorting opportunity you want to be looking for, right? So that is currently still not happening, so I'm still waiting on the sidelines with major trading positions right now. Of course, also looking at the Bitcoin weekly chart, you can clearly see, of course, Bitcoin is falling and plummeting down here. Is this weekly candle going to close so significantly red, or are we going to get recovered just like last time around in the pandemic low, basically, where we did formed, of course, a little bit of the wick on the lower side? It's going to be interesting to see how it's going to be playing out. Of course, generally speaking, on the weekly time frame, if we're going to look at Bitcoin, we're going to look at the previous all-time high. Previous all-time high is going to be, of course, an extremely important level of support to hold on towards. We were about to exactly touch it, and I personally think that later today, once the meeting does start, guys, we are going to get potentially that scenario where we are going to be touching this all-time high here. Before once again continuing the way lower again. So it is going to be pretty interesting to see how it's going to be playing out. I will be, of course, actually anticipate that the retest of the 19.8k and see then a significant bounce from there on. So I did set up a short-term order on 19.8k, and of course, guys, let me see if I can get the orders right now up here in front of the screen. I also shared in my Telegram group all my limit orders. And basically, all the limit orders I am currently looking for, and I will be sharing them with you guys out there right now in the screen here. That is right now this, and let me place my face above it. You can basically clearly see this over here. You can see I am looking to be accumulating positions around, and if I say it correctly, yeah, around 16.5k, 17k, 17.5, 20k, and 18.5. So those are the levels I'm currently looking to be accumulating further on in towards my positions. And of course, maybe we're going to get a little bit of a flash crash, and that could be, of course, allowing me to open a trading position as well here on FOMC. So I'm trying to catch a live trade here with you guys out there. I personally think I am anticipating 75 basis points. It's, of course, very high risk for trading right now here. So I am anticipating maybe we can get that retest of that all-time high, 19.8k, and I'm going to catch that very quick move here, that quick retest of the all-time high, and then move up here. So, of course, I am using a stop loss here. The stop loss that I set was, let me see, stop loss is around 19.4k, so, of course, that is officially confirming we're breaking below the previous all-time high. So, it's going to be very important to look at right now what you should be doing. I personally think there's going to be a lot of market makers that are going to defend the 20k region. Why? It's because below 20k, there are many liquidations to come for big companies and big firms basically in the space. Of course, many discuss big discussed level. It's, of course, the 200 weekly moving average. If you have not heard about the 200 weekly moving average, you should definitely wake up, because this is, of course, one of the most important levels of support where Bitcoin currently is trading on. And, of course, it's also one of the most discussed levels of support. And that is why USD provides very good significance. Also, I was looking at this market, and actually, if you look at this market right now here, right, and you look at this uptrend right here we're forming, and we, of course, were forming this downward sloping trend line over here. Basically, Bitcoin, and let me remove the 200 weekly moving average, Bitcoin was trading in this significant, yeah, basically symmetrical triangle, right? We broke out of this triangle and we moved up. But what if I extend this level oh, sorry, this is not correctly drawn here. What if I extend this level, and let me draw it correctly in the trend line like I was supposed to do it, like this. Unfortunately, I removed my drawing. So yeah, like this. So here you can see we are having this significant trend getting formed with the pandemic fake out basically on the market. You can see the symmetrical triangle is getting formed. And if I extend the thing to the right here right now, you can see Bitcoin is right now retesting weekly level support towards the upside. Of course, we're right now trading below it, but it's going to be all matter where we're going to close the weekly candle right now. So pretty interesting. Bitcoin bouncing also on the imminent short term before the Federal Reserve meeting is going live. So guys, like I told you, make sure to stick in this stream right now, because in exactly 35 minutes from now on, the meeting is going to get started, and we're going to discuss exactly what's currently going on here. So make sure to stick with me. But this is, of course, pretty interesting to see here. Will the weekly time frame hold on to support? It is going to be very interesting. But we are definitely pumping right now. Holy crazy! This is, of course, a pretty crazy pump here. Pre-conference, so pre-FOMC conference, we are pumping back towards the upside. So what is going on? We don't have a word out yet, guys. If there is any news regarding towards the basis points hike or whatsoever, you will be the first one to know. here on this live stream, so make sure to stick with that. But indeed, guys, you guys are spamming it in the chat right now. We are seeing a little bit of a movement back towards the upside. It is already 4% move, and that is the nice part about this market right now, guys. I will definitely be very cautious with trading this market right now, because trading the market right now is, of course, extremely high risk, because like you can see, there is extreme big volatility. 5% move up, and before that we were seeing a 4% move down. So be very careful with your leverage positions right now. Markets are very, very nasty to be trading here. Then before I go in towards some other charts, and I will keep on monitoring the charts as well, guys. Look at this. Fear and Greed Index reading right now 8. This is, of course, a single digit reading. Of course, extreme fear is getting currently readed on the market. Interesting to look at right here. This is, of course, probably going to be a very, very big opportunity what we're currently facing. Also, CZ is tweeting this here. It was not easy to say no to the Super Bowl ads, to the stadium naming rights, large sponsor deals, and a few months ago, we did it. Today, we're hiring 2,000 open positions for Binance. And you know, this is pretty interesting because, of course, we do know Crypto.com, Coinbase, they were all spending so much money on advertisements. And, of course, Binance was not doing it. But right now, Binance has all that capital left to, of course, hire people. They were not investing their capital on stupid advertisements. No. They invested their capital, they basically saved their capital for potential scenarios what we're currently having in the market, for potential market crashes. So I have so much respect for CZ here. It is absolutely incredible. I think this is, of course, a very good incentive what he did here. He was not spending money on Super Bowl ads what were basically extremely expensive. And I don't even know it is going to be worth it to be spending on those ads, actually, you know. So CZ doing, of course, an extremely good job here. Yeah, I'm just very proud of him, what he's currently doing here. So, CZ, congratulations that you're hiring another 2,000 positions at Binance right now. Well, of course, a lot of these other companies are firing a lot of their employees. So, yeah, also we do know CME gap. We still have a CME gap below us on $17,000, but also above us, guys. We've got some CME gaps on 29K and also one on 36 to 35,000 US dollars. Are we going to fill them? Let me know in the chat. I personally am very neutral in it. I don't necessarily think that we have to be filling the ones below. I don't really think we have to be filling them right now on the upside, but of course we also have another gap on $9,000. So everything can still happen, but do take in consideration CME gaps. Pretty interesting to look at. Usually, Bitcoin tends to be filling its gaps here on Monday or like the same week already. And of course, in this case, if it's going to be filling the CME gaps the same week, it has to be recovered all the way back up to 29K. Do I think it's going to be likely? No, I don't really think so. 75 little dump. So yeah. 75, I don't know. I think 75 we're still going to be see some very high volatility, of course, in the market, but yeah, definitely could be going both directions. So yeah, what are we going to get here? So I'm going to keep you guys up to date. Many investors are expecting to see a 75 basis point hike, basically. So that's also the most likely scenario to get here. Right now, let me check up here. Guys, we're still 30 minutes away before going live on the meeting and before, of course, seeing what is, of course, going to happen, the press conference, basically. So, yeah, of course, I think in 1 minute from now, we're going to get the reports. So let me check up here. What up, Rover? 50 pump. Yeah, 50 is definitely going to be pump, guys. Because 75 is definitely priced in right now. We can clearly see it. Also, Bitcoin dominance falling down massively right now, guys. Pretty interesting to see. Ethereum falling below its previous all-time high. Not good to see, of course. At the same time, Bitcoin addresses holding more than 10K. Still increasing their positions. Yeah, pretty interesting to see. Also, this is, of course, the liquidation price for Celsius right now here at 14,000 US dollars. So that is absolutely pretty crazy to see. 14,000 US dollars is the liquidation price for Celsius. So where we do want to be falling down is going to be pretty terrible for Celsius if it's going to be coming down towards 14,000 US dollars. So yeah, interesting. Interest rates have a long-term effect. Yeah, that's definitely true. So like I told you, market may have been pumping, but there is still an extreme high volatility. So be careful with trading this market right now. There's, of course, extreme big volatility entering the market before the FOMC meeting is going to get started. So let me see. Guys, there is some reports. Okay, we are getting a market pump right now here. Let me see. When does it start? The press conference starts in 30 minutes. But right now we should be having the reports. And let me quickly check up because the site I want to be checking it's currently lagging. It's not loading anymore. Because there's so many people that are willing to search it up. 75 confirmed people are saying it in the chat. Guys, let me check up here. Like I told you, if there's going to be 75, there are going to be some scam towards the downside, in my opinion. And afterwards, we're going to see a big pump. 75 has been confirmed. Okay. Has it been confirmed? Yeah, it has been confirmed. 75 basis points, guys. So, in fact, this is very interesting. 75 basis points. Like I told you, it has been pricing in. It has been priced in towards the market. So let me quickly go towards my my Twitter page, so you can already see it. This is, of course, the biggest hike rate since 1994, guys. Pretty crazy. So let's see what kind of effect it will be having on the market. 75 basis points. But, guys, don't forget here to stick in this stream because there is, of course, a lot of things that can still happen. Depending, of course, on what Jerome Powell is going to be saying here. Because in a moment from now on, and it's going to get started anytime soon. In 28 minutes from now on, the press conference is going to be from Jerome Powell, where he's basically going to talk about why he made this decision and what we could be looking out for in the future. And that is also having always a lot of effect on the market. So we right now actually knew there's going to be a 75 basis point hike. We were expecting it. Like I told you already on Monday. On Monday, we basically priced it in on the market. That was the whole reason the market basically fell down. And right now, we have to be waiting for the press release here, the press conference, because all the words, if he says one interesting thing about crypto, the market can pump right away here. There's so much correlation between that. So make sure to stick in the stream right now. It's going to be interesting. Let me see. Some people are saying it's... Yeah. Who cares? It's 75 basis points. Yeah, it's actually only 25 basis point more than last month. So it's not all too big here. The QP, of course, right now, what we are expecting and why the market's basically crashed so hard is all due to the fact that we're probably going to see the pace getting stepped up here with the interest rates. So, the pace is going to get stepped up right now for the coming meetings as well. And that is why we have to be waiting. That's why we have to be waiting right now. Because it's going to be very, very important to look at. So yeah, markets are showing some volatility right now. And yeah, of course, this chart is yet to be updated still. There's basically the interest rates charts where we can see the rate hikes, etc. Of course, if we're going to get that hike to 75, we're going to step all the way up to 1.75 here. So that is, oh wait, this chart is way behind. So yeah, let me check up. Chart is way behind. Yeah, 75 basis points. But yeah, please, guys, we have to right now wait for the press conference to get everything. Everyone said short, so I will open a long then. Yeah, guys, by the way, if you're interested in trading, be very careful. I've got some limit orders set up here on the lower side. In case we do drop down, I personally think that previous all-time high is going to be the level for accumulation. But in case you do want to be trading as well, make sure to check out the links in the description. Signing up with Bio will currently give you a 0% maker fee. Pretty nice, of course, if you do use the link in the description. But yeah, there are a lot of opportunities right now going to come towards us. But the interesting part is still yet to come in 25 minutes from now on. But yeah, what we are expecting, and the reason why basically we saw this massive correction on Monday here, is because probably in the coming months as well ahead of ourselves, we're going to see some more aggressive plays from the Federal Reserve. The Federal Reserve is going to be a little bit more aggressive in towards the coming months because, yeah, what we do know, if we're going to look at the inflation reports from basically last month here, the CPI date, trading economics, CPIs. Let me quickly open up this chart for you guys out there. So what we basically do know is that last month we were getting an 8.6% CPI inflation report in the US from May, and of course the forecast was basically 8.3%. So it was much worse than expected. So that was also basically the reason why we came down here, right? So if the inflation reports are bad, it's just generally speaking having a bad effect for the market, and due towards the inflation reports being so bad, they right now have to be a little bit more aggressive on that that interest rate hike basically. So yeah, markets are plummeting right now here. There is of course going to be a pretty interesting period in the market right now here. Also, let me check up on how the S&P 500 is currently basically reacting towards this market move right now here, because that is going to be important. Look at this, S&P 500 is also creating a massive movement towards the downside right now. So Bitcoin and S&P moving very similarly towards each other. This is crash. How long did you work at McDonald's? Interesting. 2 years. 2 years. And they actually wanted to be making me a manager, but then I said, no, I'm going to leave because I'm done with this job. So that is actually a fact. 2 years I worked there. Nasdaq is pumping a bit. That's pretty interesting that the Nasdaq is holding up so well. And just got liquidated. That's terrible. So yeah, Bitcoin is once again close towards that 20k mark. Like I told you, I've got a level. I'm accumulating on 19.8k. 19.8k is, in my opinion, going to be a very strong level. And also a lot of market makers will be probably step in towards the market at that region. So what am I doing? I'm trying to catch a little bit of a long position over here. And of course, in anyone, if you want to, also I've been setting up a lot of spot levels for buying. I've shared all my spot levels so far in my Telegram group, so make sure to join that one as well. Here you can find the link in the description. But also right now, guys, yeah, they're just huge opportunities here. There are huge opportunities for trading, especially if you can catch like the previous all-time high retest. I personally think it's going to be having a strong reaction for Bitcoin. Could be a little bit of a scam wick down here, and that's why I'm trying to be catching this move right here. So of course I'm doing it all live on the stream. I also set up a stop loss right here, so it's going to be an interesting trade. Small trade I'm going to be taking here with leverage. I also have set up spot levels. I'm not only accumulating with leverage but also with spot here right now in the market. DXY is running up. Yeah, that's of course nothing more than expected, because as soon as the interest rates are going up, the DXY is going to be even stronger, of course, right? So yeah, you can clearly see DXY is running up again. It has been it's been running up for quite a while right now here. You can see it's starting to become once again a little bit overbought here, and it's forming some bearish momentum right now. So yeah, maybe this is the short-term top for the DXY. Of course, if the DXY is going to come down, it's going to be positive for Bitcoin. And historically speaking, always once the DXY is basically traded above the 100 on the index, it has been a good level for accumulating Bitcoin. So, yeah, whether it's going to be another good time for accumulating Bitcoin, that's going to be all once again being seen in hindsight. But right now, definitely this is an important level to be looking at. So, yeah, we're going to keep on monitoring this right now. And as well, guys, smash up the like button, because maybe if we're going to reach a very cool like target today, I'm going to do also a small giveaway to go give something back towards the community. So make sure to smash up the like button right now. It will be absolutely appreciated. Why don't you short, bro? I want to be shorting the market, but like I told you in the beginning of the stream, I'm waiting for a better opportunity. I'm not going to short the market on its absolutely low point where it is creating momentum divergence. Where I would like to wait for is maybe, of course, a move back on the market towards higher regions, right? So what I would like to see is, of course, Bitcoin potentially moving back towards this region right here. And this is, of course, going to be probably a very good shorting region. So if we're going to get something of a touch like this, right? So right now, I'm not going to short the absolutely potential bottom of the correction. That's why I'm right now going to be looking for long positions. But yeah, of course, there are going to be some shorting opportunities along the way down still going to get found here, because yeah, we're in a clear bear market. And guys, do remember, in this bear market, there could be a possibility that we're going to be rallying all the way up back to 50k and then come down again, because that is what bear market rallies do here. Because last time, right, as well, in this bear market rally, we saw, of course, a rally all the way up towards $13,000. That was, of course, an approximately 30% away from the previous all-time high. If we're going to once again look for a move all the way back up towards 30% from the all-time high, it's going to be somewhere around this high over here. So if Bitcoin, let's say, comes back up again to 48k, that could be still a good shorting opportunity, and of course consolidate from there on and then move up eventually. So I personally think there's going to be enough shorting opportunities in the future. Right now isn't necessarily going to be... I'm not going to catch a big move anymore, most likely, over here. Yeah, Bitcoin can come down here. There are definitely some more liquidations from big companies waiting on the lower side right now. But for me, it's just too big of a risk for shorting here right now. Seems we're going to be in a recession for years. Most likely, yeah, it's going to take it's going to take a very lot for Bitcoin to actually recover from here on. We're considering the macro environments, considering everything that's going on here. But also, guys, I tweeted about this, and of course, this is something absolutely stupid to not take serious at all. But what happens if the Federal Reserve agrees to the economy being cooled down already enough? And this will be, of course, the only last hike. We don't know. And that is why, guys, it's going to be important to stick in this stream right now, because what Jerome Powell is going to be saying in a moment from now on in this live press conference is going to be mattering everything. This is going to be everything, of course. So make sure to stick in the stream right now. Make sure to slap up that like button right here, because this is going to be so important to see what is going to be happening right now, right? So yeah, is he going to be saying that this is maybe the last hike? We don't know. It's of course a thing I'm saying what is not what you should not take serious, because I personally don't think it's the last hike. I personally think they're at least going to be hiking the rates in towards the end of this year. Next year, I'm not sure if they will be keep on hiking the rates here. Maybe they're going to slow down a little bit here. Why? Is because, yeah, we do have the elections coming up here, and there's always going to be a lot of influence due to that. So pretty interesting. Hard bear market. Bitcoin down 57%. If I say it correctly, Bitcoin is down even more, my man. So Bitcoin is down 70%, right? Yeah, 70% right now from all-time high. So yeah, this is of course a pretty tough bear market indeed, but it's a part of the cycle, and only a few of the people will actually survive this cycle, and that is of course part of this market. Not everyone survives every single market movement, and of course if you do manage to survive this market movement right now, this market crash, the bear market, you're going to be benefiting from it. So it's going to be interesting. If you catch the potential bottom, where do you think the TP will be? Around maybe 28k. I'm not going to take profit at one level at all. I'm going to take profit at certain levels. So yeah, if I'm going to be able to catch that bottom, I'm going to of course set my stop loss at profit. So I'm basically have no risk of accumulating a trade at all in that region. So I'm going to just showcase you guys what I'm going to do with it. I've got my stop loss set up here. I will be moving my stop loss to entry, of course, if we get a significant bounce enough here. But what I would really like to see right now here is just Bitcoin wicking down to 19.8k. So this is going to be the level that I want to be seeing Bitcoin going towards, this purple line. That is going to be allowing me to fill up my entry, previous all-time high retest, and of course move up from off that point. And I can guarantee you there are so many limit orders set up on this level, so potentially we're not even going to touch it exactly and move up already, right? So yeah, maybe my order is a little bit too tight here, but I mean, I'm worth the risk. If I don't get filled up here, I am okay. I'm not going to be crying in the corner. I'm just going to see how it goes here. If I don't get entered, it's okay. Maybe I missed the exact bottom, but I do have enough time for accumulating more Bitcoin on this region right now. So yeah, this is of course not a problem for me. But anyways, yeah, if we are going to get that retest of the previous all-time high and we're going to fail to hold on towards it, we're right away going to fall even lower. And that's why my stop loss is set up on 19.4k. And of course, also, if we're going to fall further down here, in the end of the day, I will be only benefit from it because I'm able to be buying more cheaper Bitcoin from my spot levels I basically set up here. Also, do take in consideration, this correction is still quite fresh, so everything can happen. That's what I pointed out here. The weekly candle is still yet to close here for another 4 days, so there's a very fresh correction we're currently in here. And basically markets can still move towards either direction. But yeah, 75 basis points. It's okay, guys, to get. It's okay. I'm currently just waiting to get this this press conference rolling, and it's happening in 13 minutes from 15 minutes from now on, guys. So make sure to get ready. It is going to be a very, very exciting exciting interview we're going to look at. So make sure to smash up the like button. How much leverage will you use? I will use an casual 12x leverage. It's not all too high of a leverage, and of course I'm only going to be affording to lose like 2%, so even less than 2%. So it's going to be pretty low risk trade here. So yeah, if we're going to get filled up here, and anyways, guys, if anyone is interested in trading, you don't know it. Right now I'm trading this on FOMC. FOMC is also having a very cool deposit bonus right now here. You actually need to deposit less money to get the 4.1k here on FOMC, so that's pretty cool. And of course, yeah, you can check it out in the link description. What if Powell says something totally unexpected? And that's why I told you that is why we should be watching this FOMC meeting, because if he says something unexpected, we're going to be, of course, give our live feedback on it, and we're going to be looking what the charts are going to be basically due to his weird things he's going to be saying. So it is just going to be very interesting. It's going to be very interesting. So 75 basis points it is. Yes, it is 75 basis points, guys. Nothing more, nothing less. So yeah, pretty decent in my opinion, right? It's not too bad. It's not. It's okay. It's okay. Hey, bro, have you been noticing the bullish wedge on the 1 hour? So I mean, yeah, we could be starting to be forming actually a W right here, right? So maybe we're going to already start to be bottoming out over here. Of course, like I told you, the 75 basis points was already priced in here, and actually finding a bottom over here on 20k, a short-term bottom. I'm not necessarily saying Bitcoin can't go lower anymore, because sometimes people, once I say bottom, people right away say, oh, you thought it was a bottom. No, for the imminent short term, we could see a little bit of bottom formation getting formed here. So yeah, that could be happening right now, depending on, of course, how this candle is going to unfold, because right now we're still clearly in a downtrend. We can fall even further more towards the downside. 50-minute time frame still, of course, yesterday broke a little bit of its trend, but faked out a little bit here. You can clearly see we have to be breaking this downtrend right now in this case. As long as we're not breaking this downtrend right here, we are just going to be trading on further on towards the downside region, and there's not going to be much more to be playing around for. So what we do need to do in this case here is as well break above this trend here. This is going to be also allowing us to take a little bit of a long position if we break above this trend over here. This is an important trend, and this, of course, once again, guys, a very good breakout trade coming up right now. So if Bitcoin in case does decide to be breaking this trend right here, could be a very strong breakout trade we could be looking at on the market. So yeah, very interesting. Pretty interesting. Look at the weekly selling volume. Yeah, guys, I mean, talking about selling volume and talking about these charts. Yeah, what I find very interesting is the realized loss we're currently farming in the market, right? So many people don't look at on-chain data, what I think is very stupid, because this is telling all the stories. On-chain data right now, 2 days in a row, we've been realizing more than $4 billion in loss here, basically meaning that many people are selling their tokens against a loss here. So historically speaking, always once this happened, just like here in May, in the summer low here, just like the pandemic crash here, and just also like the bear market low, these are events where many people sell against the loss because they're afraid, they're in fear, and that is why they're selling their tokens against the loss. But historically speaking, those are the best ranges for accumulation. So yeah, pretty interesting to see this actually playing out right now in the market. What is a BPS? It's a basis point, so 0.75% interest rate hike. 0.75% bad news or good news. What are your thoughts? I think it's bad news if you were telling me this last week, but now it's already priced in. So is it bad news right now for the imminent short term? No, I don't think so. Imminent short term, it's relatively neutral, and actually I think it's not bullish, of course, but it's just neutral. Like, it didn't came unexpected. I told you already yesterday what was going to be going down today. We were going to get that 75 basis point hike, but yeah, it's just going to be important to see whether what is he going to say here, Jerome. It's just going to be very important what Jerome is going to be saying right now. Is he going to say something terrible? Is he going to say something positive about the market? Maybe. We just have to wait and see, because there are definitely going to be some questions to Jerome about how he's basically destroying all the wealth that was basically getting created in the last 10 years. Because, yeah, he's destroying wealth right now. So, guys, 10 minutes out right now. How do you know whether it's priced in? So, what we do know is that this Monday, we got the word out that that they were probably going to hike in this month, and of course probably in the next month as well, with 75 basis points. So that happened Monday. And what happened also on Monday, the market absolutely plummeted all the way down. So it's not only Bitcoin, but also the S&P 500. So do I know it's priced in? It's due to that, because this Monday already we got the news out that most likely they were going to increase the rates with 75 basis points. So that is basically why. A lot of wealth has been printed. True. True. A lot of wealth has been printed, but also a lot of destruction has been taking place. It's 100% priced in every time. Yeah, 90% of the time, 99% of the times it's priced in, because they don't want to surprise markets. Always on the meetings, they don't like to be surprising the markets, so that's why. Earlier today, actually, guys, I've been talking to some venture capitals. Those venture capitals were talking about buying also on 19.8K, also buying on 18K, and also buying on 14K. That's what the VCs were telling me. And they were basically deploying approximately 40% of the capital between the 18K and 19K. That's what the VC was telling me. And it's like a multi-billion-dollar VC. So there's going to be for sure, what I know for sure, because I've literally talked to him and he literally showed me the data, what they're planning to do, because venture capitals are buying a Bitcoin right now here. And that is why I do know smart money is entering on that 18 to 20K region. And actually that guy also has been warning everyone for this correction. But he hasn't not been screaming so loud. But yeah, he's right now looking to deploy cash around starting from 18 to 20K here. So actually pretty interesting to see what venture capitals are right now doing, right? Of course, if I get any more insights on certain things here, I will let you know here. Also, a thing I do know is that market makers are currently busy also holding up the bid price, bid DAO. I do know that there are a lot of market makers trying to hold and create price stability over there. So also pretty interesting to actually look at, in my opinion, on this region. There are just many things here right now going on. But venture capitals definitely could be having a large impact on this market. So check Bitcoin longs last 2 weeks. Yeah, guys, it's crazy. It is absolutely crazy what is currently going on here. Look at this. This is the bitfinex whales opening their long positions. And let me overlay once again the Bitcoin chart on top of it. And look at this. It is pretty crazy what we're currently seeing, right? So we do know these charts move against each other. And right now we can see the Bitcoin price falling and the whales on the other side on Bitfinex, and we do know Bitfinex created USD Tether. They have a lot of impact on the markets, and they're opening massive long positions right now here. Do they know more than we know? And actually, all the times that usually they tend to be opening large positions in longs here, we tend to be seeing, of course, also usually some USD Tether creation getting formed in the market and pumping up the Ponzi, basically. So, yeah, what is going to be happening with this? We don't know in hindsight. We don't know, of course, right now, I should say. But yeah, in hindsight, it probably will once again seem very obvious. But of course, we do know these Bitfinex bulls are loading up on longs. And historically speaking, if I zoom out, I can show you the proof. Yeah, here it is. Always once they're opening longs, the market tend to be rallying afterwards. And of course, once they're closing their longs, the market tend to be, of course, being in an increasing period of strength. So they always decrease their longs in strength and they always increase their longs in weakness. So it's a very interesting thing to be looking at right now. And guys, we're right now only 6 minutes away from the Federal Reserve meeting. Guys, how hyped are you? Let me know in the chat here. Smash up the like button right now, guys, in the chat towards the new all-time high. Will be absolutely crazy. I will be right away saying if we can smash it up towards 1,000 likes on today's stream, I'm going to do a $100 giveaway towards one random follower that is right now watching this stream. So make sure to smash up the like button. It's going to be absolutely amazing if you guys can do that. And of course, in a few minutes from now on, we're going to be watching the live Federal Reserve press conference. They hiked the interest rates with 75 basis points, like we do know here. And what is Jerome Powell going to be saying right now here? Is he going to be, of course, say some positive things about the market, what he's planning to do here in the coming weeks, in the coming months here? Could this be pumping the market today? We just have to wait and see. Or is it going to create one massive correction right now today in the market, even further on that it already has been correcting on the recent days? Guys, it is going to be a critical, basically meeting that we're going to be watching in a few seconds from now on. So make sure to smash up that like button towards the new altcoin. It will be absolutely amazing. But more importantly, guys, we're going to just witness on how the price action is going to be getting influenced once again by the Federal Reserve meeting. And guys, no one has so much power as the Federal Reserve, and that is why we're going to pay 1000% attention towards this live stream. So yeah, pretty interesting how it is going to be playing out right now. And excuse me, I am figuring some stuff out right now. Yeah, there it is. I hate the Fed. Yeah, I mean, guys, you can hate it or you can just deal with it. I mean, I don't like them, but yeah, we just have to deal with it. It's just the fact how it currently is, right? So we can't change anything about it. Could be a could be a very important day today for Bitcoin. This day could be going down in history books, guys. Is it going to be going down as the crazy bottom Bitcoin has been forming on the market? Or could it be going down as the biggest liquidation event ever seen in cryptocurrency space? Because yes, guys, there are many companies borrowing against each other, borrowing with assets against each other, and there is so much money getting liquidated if Bitcoin goes below 15K. And it's going to be very bad for the markets. If Bitcoin ever goes below, let's say, $18,000, there's going to be a snowball effect in the market. There are going to be massive liquidations, and the price could be plummeting the way down here. It could be plummeting all the way down. So yeah, we are definitely in very important stages in the market right now. Is this market absolutely going to go down to zero? Is Bitcoin going to be breaking a trend that has been basically holding up for always? Or is it going to be, of course, once again, continue its trend and not retest its previous all-time high and just continue the way up? Because in the history, Bitcoin has never retested its all-time high in the next cycle. And this purple line over here is the previous all-time high of Bitcoin. So we are very close right now, in fact. On the time of recording, on the time while we are live streaming, we're only a 4% correction away from that previous all-time high. So yeah, it's going to be very interesting to see what is actually going to be playing out right now here. Is USD Tether safe? I personally think yes. But always make sure you have a little bit USDC and a little bit USD Tether. It's just smart to diversify. Also a little bit of BUSD, you know, have a diversified portfolio. Never place all your bets on once. Also with stablecoins, just diversify your stablecoins. Actually, if you sold Bitcoin in 69K perfectly and you were holding USD Terra and USDDD, it's crazy because you're probably getting wrecked completely while you did a good job by selling the all-time high and you were holding the wrong stablecoin. So make sure you're diversified. I personally think that USDC is definitely the safest stablecoin to hold. Just like I think USD Tether is just fine. I have no issues with that actually. So yeah, make sure that you're at least not holding any Luna whatsoever, you know. So 2 more minutes to go before we're going to go live in towards the meeting, guys. If you don't know already, I've got some orders set up here on the lower side. I am going to be accumulating more Bitcoin if we're going to fall down here towards this purple line of support. So yeah, it's going to be an interesting few amount of hours. I've got a long position right now set up already. So if we do decide to be falling down here towards the previous all-time high, I'm going to be opening a massive long position. And guys, before we are going to go in towards the meeting where we're going to see Jerome Powell talking about the market, I will be to say the last time, if you want to be, of course, trade here, you can check out the link in the description. You can claim insane deposit bonus right now here, and that is, of course, the time to be benefiting from it. If we smash it up towards 1,000 likes, I will be doing also a very small giveaway here, so make sure to smash it up towards a new all-time high. But anyways, guys, I'm going to be enabling sounds. Test. So yeah, I'm quickly doing some checkups right now if everything is working fine. Guys, do you hear it? I think you do. Yeah, it's alright. I see everything is working. Bybit frozen for anyone else? No. I'm actually right now on the platform on my laptop over here. So yeah, guys, we're about to get started in 1 minute. All good. Here we go. Here we go, guys. Are you ready? Smash up the like button. The Federal Reserve meeting is right now starting. This is time to be paying attention. Sit back, relax, take a coffee, take a tea, drink some water, and let's watch this meeting. I'm actually getting myself a little bit of sparkling water, guys. Sparkling water is definitely the best to drink. It's going to be interesting how the markets are going to react towards the Federal Reserve meeting right now. We're waiting for Jerome Powell to come on stage. The live stream, of course, did clearly start it, and here's coming.
Good afternoon. I will begin with one overarching message. We at the Fed understand the hardship that high inflation is causing. We're strongly committed to bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2.5 years and have proved resilient. It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight, and inflation is much too high. Against this backdrop, today the Federal Open Market Committee raised its policy interest rate by 0.75 percentage points. And anticipates that ongoing increases in that rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. Overall economic activity edged down in the first quarter as unusually sharp swings in inventories and net exports more than offset continued strong underlying demand. Recent indicators suggest that real GDP growth has picked up this quarter, with consumption spending remaining strong. In contrast, growth in business fixed investment appears to be slowing, and activity in the housing sector looks to be softening, in part reflecting higher mortgage rates. The tightening in financial conditions that we've seen in recent months should continue to temper growth and help bring demand into better balance with supply. As shown in our summary of economic projections, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth running below 2% through 2024. The labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies at historical highs, and wage growth elevated. Over the past 3 months, employment rose by an average of 408,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. FOMC participants expect supply and demand conditions in the labor market to come into better balance, easing the upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises somewhat over the next few years, moving from 3.7% at the end of this year to 4.1% in 2024, levels that are noticeably above the March projections. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in April, total PCE prices rose 6.3%, excluding the volatile food and energy categories. Core prices rose 4.9%. In May, the 12-month change in the Consumer Price Index came in above expectations at 8.6%, and the change in the core CPI was 6%. Aggregate demand is strong. Supply constraints have been larger and long-lasting than anticipated, and price pressures have spread to a broad range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is boosting prices for gasoline and food and is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to exacerbate supply chain disruptions. Good. FOMC participants have revised up their projections for inflation this year, particularly for total PCE inflation, given developments in food and energy prices.
Interesting.
The median projection is 5.2% this year and falls to 2.6% next year and 2.2% in 2024.
Okay.
Participants continue to see risks to inflation as weighted to the upside. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation.
He's shaking like crazy, guys. Are you seeing that?
We are highly attentive to the risks high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, resulting in a 1.5 percentage point increase in the target range so far this year. The committee reiterated that it anticipates that ongoing increases in the target range will be appropriate. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Coming out of our last meeting in May, there was a broad sense on the committee that a 0.5 percentage point increase in the target range should be considered at this meeting if economic and financial conditions evolved in line with expectations. We also stated that we were highly attentive to inflation risks and that we would be nimble in responding to incoming data and the evolving outlook. Since then, inflation has again surprised to the upside. Some indicators of inflation expectations have risen, and projections for inflation this year have been revised up notably. In response to these developments, the committee decided that a larger increase in the target range was warranted at today's meeting. This continues our approach of expeditiously moving our policy rate up to more normal levels, and it will help ensure that longer-term inflation expectations remain well anchored at 2%. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 3.4% at the end of this year, a percentage point and a half higher than projected in March, and 0.9 percentage point above the median estimate of its longer run value. The median projection rises further to 3.8% at the end of next year and declines to 3.4% in 2024, still above the median longer run value. Of course, these projections do not represent a committee plan or decision, and no one knows with any certainty where the economy will be a year or more from now. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy. Clearly, today's 75 basis point increase is an unusually large one, and I do not expect moves of this size to be common.
Okay, interesting.
From the perspective of today, either a 50 basis point or a 75 basis point increase seems most likely at our next meeting.
Bullish.
We will, however, make our decisions meeting by meeting, and will continue to communicate our thinking as clearly as we can. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored.
You can see market is right away reacting.
Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks and determined to take the measures necessary to restore price stability. The American economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Okay. So like we already knew it.
Thank you. Howard Schneider with Reuters. Two related questions. Chair Powell, Did you feel you boxed yourself in with the language you used at the last press conference on 50 basis point hikes in June and July? And would you please give us as detailed a sense as you can of what role you played in reshaping market expectations so quickly on Monday?
So, as you know, we always aim to provide as much clarity as we can about our policy intentions, subject to the inherent uncertainty in the economic outlook, because we think monetary policy is more effective when market participants understand how policy will evolve, when they understand our objective function, our reaction function. And in the current highly unusual circumstances with inflation well above our goal, we think it's helpful to provide even more clarity than usual, again, subject to uncertainty in the outlook. So, and I think over the course of this year, financial markets have responded and have generally shown that they understand the path we're laying out. Of course, it remains data dependent, and so that's what we generally think about guidance, and that's why we offer it. And of course, when I offered that guidance at the last meeting, I did say that it was subject to the economy performing about in line with expectations. I also said that if the economy performed, if data came in worse than expected, then we would consider moving even more aggressively. So we got the CPI data and also some data on inflation expectations late last week, and we thought for a while, and we thought, well, this is the appropriate thing to do. So then the question is, what do you do? And do you wait 6 weeks to do it at the next meeting? And I think the answer is that's not where we are with this. So we decided we needed to go ahead, and so we did. And that's really how we made the decision.
Okay, Gina?
It's going to be important to break this trend. If we break this trend, it's going to be pretty interesting. 2 minutes before we close.
Thanks for taking our question. Gina Smilik with the New York Times. I guess I wonder if you could describe for us a little bit how you're deciding how aggressive you need to be. So obviously 75 today. What did 75 achieve that 50 wouldn't have, and why not just go for a full percentage point at some point?
Sure. So if you take a step back, what we're looking for is compelling evidence that inflationary pressures are abating and that inflation is moving back down. And we'd like to see that in the form of a series of declining monthly inflation readings. That's what we're looking for.
Probably next month
and by this point, again, so we had actually been expecting to see clear signs of at least inflation flattening out and ideally beginning to decline. We've said that we'd be data dependent, focused on incoming data, highly attentive to inflation risks, the things that I mentioned to Howard moments ago. So contrary to expectations, inflation again surprised to the upside. Some indicators of inflation expectations have risen. And projections of this year have moved up notably. So we thought that strong action was warranted at this meeting, and today we delivered that in the form of a 75 basis point rate hike, as I mentioned. So what was the point of it really is this. We've been moving rates up expeditiously to more normal levels. And over the course of the 7 months since we pivoted and began moving in this direction, we've seen financial conditions tighten, and appropriately so. But the federal funds rate, even after this move, is at 1.6%. So again, the committee is moving rates up expeditiously to more normal levels. And we came to the view that we'd like to do a little more front-end loading on that. So I think that the SEP gives you the levels that people think are appropriate at given points in time. This was really about the speed with which you would get there. So as I mentioned, we 75 basis points today. I said the next meeting could well be about a decision between 50 and 75. That would put us at the end of the July meeting, in that range in that more normal range, and that's a desirable place to be because you begin to have more optionality there about the speed with which you would proceed going forward. Just talking about the SEP for a second, what it really says is that committee participants widely would like to see policy at a modestly restrictive level at the end of this year. And that's 6 months from now. And so much data and so much can happen. So remember how highly uncertain this is. But so that is generally a range of 3 to 3.5%. That's where people are. And that's what they want to see, knowing what they know now and understanding that we need to be we need to show resolve, but also be flexible to incoming data as we see it. If
Yeah,
things
if
are
it
better,
does breakout.
we don't need to do that much. So,
Formation of the trend
and if they're
breakout,
not, then
we're
we,
going to
you
see
know,
a big
we either
pump
do that
again.
much or possibly even more. But in any case, it will be very data dependent.
Very good
Then
Bitcoin.
you're looking at next year, and what you're seeing is people see a bit more tightening and in a range of maybe 3.5% to 4%. And that's generally what people see as the appropriate path for getting inflation under control and starting back down and then getting back down to 2%. So 75 basis points seem like the right thing to do at this meeting, and that's what we did.
Okay, very bullish. He's basically saying probably next month.
Steve
it's gonna be
Leishman,
50 again,
CNBC.
so
Thank
it's
you
good
for taking my
Bitcoin.
question, Mr.
Probably
Chairman.
We're going to see some more
You have not
volatility.
used the phrase in a long
Very good.
time, monetary policy is in a good place, which is a phrase that you used to use often. Now that the committee is projecting 4% or 3.8% next year in terms of the funds rate, which is similar to where the market is now, the futures market of 4% funds rate next year, do you think that's a level that is going to be sufficiently high enough to deal with and bring down the inflation problem? And just as a follow-up, could you break that apart for me? How much of that is restrictive, and how much of that is a normal positive rate that ought to be embedded or not, in your opinion, in the funds rate? Thank you.
Sure. So the question really is, how high does the rate really need to go? And this is, the estimates on the committee are in that range of 3.5% to 4%. And how do you think about that? Well, you can think about the longer run neutral rate. You can compare it to that, and we think that's in the mid twos. You can look, frankly, at broader financial conditions. You can look at, asset prices. You can look at the effect you're having on the economy, rates, asset prices, credit spreads. All of those things go into that. You can also look at the yield curve and ask, all along the yield curve, where is the policy rate? So for much of the yield curve now, real rates are positive. That's not true at the short end. At the short end of the yield curve in the early years, you don't have you have negative rates still. So that really is one data point. It's one part of financial conditions. So I think I have to look at it this way. We move the policy rate, that affects financial conditions, and that affects the economy. We have, of course, rigorous ways to think about it, but ultimately it comes down to, do we think financial conditions are in a place where they're having the desired effect on the economy? And that desired effect is, we'd like to see, demand moderating. Demand is very hot still in the economy. We'd like to see the labor market getting better in balance between supply and demand, and that can happen both from supply and demand. Right now, demand is substantially higher than available supply, though. So we feel that there's a role for us in moderating demand. Those are the things we can affect with our policy tools. There are many things we can't affect, and those would be, the things, the commodity
Bitcoin
price
retesting.
issues that we're having around the world due to the war in Ukraine and the fallout from that, and also just all of the supply side things that are still, pushing upward on inflation. So that's really how I would think about it.
But does 3.8%, 4% get it done? Does it get the job done and breaking the back of inflation?
I think it's certainly in the range of plausible numbers. I think we'll know when we get there, really. I mean, honestly, that would be, you would have positive real rates, I think, and inflation coming down by then. I think you'd have positive real rates across the curve. I think that the neutral rate is pretty low these days, so I would think it would. But you know what? We're going to find that out empirically. We're not going to be completely model driven about this. We're going to be looking at this, keeping our eyes open and reacting to incoming data, both on financial conditions and on what's happening in the economy.
Thank you, Nick.
Thanks. Nick Timmeros of the Wall Street Journal. Chair Powell, you've said that you like your policy to work through expectations, and now obviously this decision was something quite different from how you and almost all of your colleagues had set those expectations during the intermeeting period. And I know you just said that what changed was really the inflation data, the inflation expectations data, but I'm wondering, on the inflation expectations data, was there something you saw that was unsettling enough to risk eroding the credibility of your verbal guidance by doing something so different from what you had socialized before?
So if you look at we look at a broad range of inflation expectations. So you've got the public, you've got surveys of the public and of experts, and you've also got market-based. And I think if you look across that broad range of data, what you see is that expectations are still in the place, very much in the place, where short-term inflation is going to be high, but comes down sharply over the next couple of years. That's really where inflation expectations are. And also, as you get away from this episode, they get back down close to 2%. And so this is really very important to us that remain the case. And I think if you look for most measures, most of the time, that's what you see. If we even see a couple of indicators that bring that into question, we take that very seriously. We do not take this for granted. We take it very seriously. So the preliminary Michigan reading, it's a preliminary reading. It might be revised. Nonetheless, it was quite eye-catching, and we noticed that. We also noticed that the index of common inflation expectations at the board has moved up after being pretty flat for a long time. So we're watching that, and we're thinking, this is something we need to take seriously. And that is one of the factors, as I mentioned, one of the factors in our deciding to move ahead with 75 basis points today was what we saw in inflation expectations. We're absolutely determined to keep them anchored at 2%. That was one of the reasons. The other was just the CPI reading.
So if you saw a movement like that again, another tick up in inflation expectations, would that put a 75 or even 100 basis point increase in play at your next meeting?
You know, I'll just say we're going to react to the incoming data, and appropriately, I think. So I wouldn't want to put a number on what that might be. The main thing is to get rates up, and then pretty soon we'll be in an area where we're, I think, as you get closer to the end of the year, you're in a range where you've got restrictive policy, which is appropriate. 40-year highs in inflation. We think that policy is going to need to be restrictive, and we don't know how restrictive. So I think that's how we'll take it.
Hi, Chair Powell. Neil Irwin from Axios. Thanks for taking our questions. The late-breaking kind of decision to go to 75 basis points, do you worry that will make policy guidance a less effective tool in the future? And should we think of that as a kind of symmetrical reaction function if we start to get soft readings on inflation, or if the labor market starts to roll over?
To take your second question first, yes. I mean, I think we're resolved to take this on, but we're going to be flexible in the implementation of it. Sorry, and your question was guidance. So again, the overall exercise is that we try to provide as much clarity about our policy intentions as we can, because we think that makes monetary policy work better. It's always a trade-off, because you have to live with that guidance. And so you do it, and it helps a lot of the time. I frankly think this year has been a demonstration of how well it can work. With us having really just done very little in the way of raising interest rates, financial conditions have tightened quite significantly through the expectations channel, as we've made it clear what our plans are. So I think that's been a very healthy thing to be happening. So, and I would hope that it's always going to be, any guidance that we give is always going to be subject to things working out about as we expect. And in this particular situation, we're looking for something specific, and that is progress on inflation. We want to see progress. We want to see inflation can't go down until it flattens out, and that's what we're looking to see. And if we don't see that, then that's the kind of thing that will cause. Even if we don't see progress for a longer period, that could cause us to react. But we will soon enough. We will be seeing some progress at some point, and we'll react appropriately to that too. But I would like to think, though, that our guidance is still credible, but it's always going to be conditional on what happens. This is an unusual situation to get, some data late during blackout, very close to our meeting. Very unusual to one that would actually change the outcome. So
Try to enter a trade.
I've only seen, in my 10 years plus here at the Fed, I've only seen something like that, even close to that, 1 or 2 times. So I don't think it's something that'll come up a great deal.
I was too slow on entering my trade, but this is a very interesting read, actually. So, yeah.
Thank you so much for taking our questions. Colby Smith with the Financial Times. On the clear and convincing threshold for the inflation trajectory, what is the level of realized inflation that meets that criteria? And how is the committee thinking about the potential trade-off of much higher unemployment than even what's forecasted in the SEP if inflation is not moderating, at this acceptable pace?
Sorry, the second part I didn't get.
What's the potential trade-off with higher unemployment than even what's forecasted in the SEP if inflation is not moderating at an acceptable pace?
Right. So what we want to see is a series of declining monthly readings for inflation, and we'd like to see inflation headed down. So, and right now our policy rate is well below neutral, right? So, soon enough we'll have our policy rate. Let's assume the world works about like the SEP says. The policy rate will be up where we think it should be, and then the question would be, do you slow down? Does it make you, that you'll be making these judgments about, is it appropriate now to slow down from 50 to 25, let's say, or speed up? So that's the kind of thinking we'll be doing, and we're looking, ultimately, we're not going to declare victory until we see a series of these, really see convincing evidence, compelling evidence that inflation is coming down. And that's what I mean by, that's what it would take for us to say, okay, we think this job is done, because we saw, and frankly, we saw last year, inflation came down over the course of the summer and then turned right around and went back up. So I think we're going to be careful about declaring victory. But again, the implementation of our policy is going to be flexible and sensitive to incoming data.
Are you more concerned now that to bring down inflation, it's going to require more than just some pain at this point?
So again, I think that I do think that their objective, and this is what's reflected in the SEP, but our objective really is to bring inflation down to 2% while the labor market remains strong. I think that what's becoming more clear is that many factors that we don't control are going to play a very significant role in deciding whether that's possible or not. And there I'm thinking, of course, of commodity prices, the war in Ukraine, supply chain, things like that, where we really can't, the monetary policy stance doesn't affect those things. So, but having said that, there is a path. There's a path for us to get there. It's not getting easier. It's getting more challenging because of these external forces, and that path is to move demand down, and you have a lot of surplus demand in take for example in the labor market. So you have two job vacancies essentially for every person actively seeking a job, and that has led to a real imbalance in wage negotiating. You could get to a place where that ratio was at a more normal level, and you would expect to see those wage pressures move back down to a level where people are still getting healthy wage increases, real wage increases, but at a level that's consistent with 2% inflation. So that's a possibility, and you could say the same thing about some of the product markets where there's just excess capacity, and where the strong demand has gone into where they're capacity constrained, right? So you have effectively what we think of as a vertical supply curve or close to it. So demand comes in and it's very strong, and it shows up in higher prices, not higher quantities, not more cars, because they can't make the cars because they don't have the semiconductors. So in principle, that could work in reverse. When demand comes down, you could see, and it's not guaranteed, but you could see prices coming down more than the typical economic relationships that you see in the textbooks would suggest, because of the unusual situation we're in on the supply side. So there's a pathway there. It is not going to be easy, and again, it's our objective, but as I mentioned, it's going to depend to some extent on factors we don't control.
Rachel.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. So the new projections show the unemployment rate ticking up through 2024. Is a higher unemployment rate necessary in order to combat inflation? And what is lost if the unemployment rate has to go up and people lose their jobs in order to control inflation? Thank you.
So You're right. In the SEP, we have unemployment going up to 4 point. The median is 4.1%. There are, of course, a range of actual forecasts, and I would characterize that if you were to get inflation down to, on its way down to 2%, and the unemployment rate went up to 4.1%. That's still a historically low level. We hadn't seen unemployment rates below 4% until a couple of years ago. We'd seen it for like 1 year in the last 50.
Such a good setup right
So
now.
the idea that 3.6% is historically low in the last century. So a 4.1% unemployment rate with inflation well on its way to 2%, I think that would be I think that would be a successful outcome. So we're not looking to have a higher unemployment rate, but I would say that I would certainly look at that as a successful outcome.
So yeah, we just missed an entry by $4, guys. This is
We're
terrible.
not, we don't seek to put people out of work. Of course, we never think too many people are working and fewer people need to have jobs. But we also think that you really cannot have the kind of labor market we want without price stability. And we have to go back and establish price stability so we can have that kind of labor market. And that's a labor market where, where workers are getting wage increases. Maybe the workers at the lower end of the spectrum are getting the biggest wage increases, as they were before the pandemic, where participation is high, where there's lots of job opportunities, where it's just the labor market we had before the pandemic that's what we want to get back to. And you see, disparities between various groups at historic lows. We'd love to get back to that place. But to get there, it's not going to happen with the levels of inflation we have. So we have to restore that. And it really is in service in the medium and longer term of the kind of labor market we want and hope to achieve.
Hi, Chair Powell. Matthew Boesler with Bloomberg. So as you just mentioned, the committee is now projecting a 0.5 percentage point rise in the unemployment rate in the SEPs over the next couple years. And it removed a line from its policy statement about thinking that the labor market can remain strong while it tightens policy. You just mentioned that that is still your objective, though. So I'm wondering if you could explain why that line was removed from the statement, and also whether this means the FOMC is trying to induce a recession now to bring inflation down.
We're not trying to induce a recession now. Let's be clear about that. We're trying to achieve 2% inflation consistent with a strong labor market. That's what we're trying to do. So let me talk about that sentence. Clearly, it's our goal to bring about 2% inflation while keeping the labor market strong, right? And that's kind of what the SEP says. That the SEP has inflation getting down to a little above 2% in 2024 with unemployment at 4.1%. So, and this is a strong labor market. This is a good labor market. And as I mentioned, there are pathways to do it. But those pathways have become much more challenging due to factors that are not under our control. Again, thinking here of the fallout from the war in Ukraine, which has brought a spike in prices of energy, food, fertilizer, industrial chemicals, and also just the supply chains more broadly, which have been larger and longer lasting than anticipated. So the sentence that we deleted said that we believe that appropriate monetary policy effectively alone can bring about the result of 2% inflation with a strong labor market. And so much of it is really not down to monetary policy. It just didn't, the sentence isn't, it kind of says on its face that monetary policy alone can do this. And that just didn't seem appropriate, so we took the sentence out.
And given the new projections for the unemployment rate, could you talk a little bit about what accounts for such reduced confidence against, say, a month ago or 3 months ago that inflation will largely normalize on its own as these supply side issues get worked out? Thanks.
Well, yeah,
21.3K is a very good one.
Again, we've been expecting
21.3K is going to be a good entry in my opinion.
the opposite. So I also think the situation really since the consequences of the Ukraine war become more and more clear, what you're seeing is the situation getting more difficult. And you look around the world, I mean, lots of countries are looking at inflation of 10%. And it's largely due to commodities prices. But all over the world, you're seeing these effects. And so, and we're seeing them here. Gas prices, all-time highs and things like that. That's not something we can do something about. So that is really, and by the way, headline inflation is important for expectations. The public's expectations, why would they be distinguishing between core inflation and headline inflation? Core inflation is something we think about because it is a better predictor of future inflation. But headline inflation is what people experience. They don't know what core is. Why would they? They have no reason to. So expectations are very much at risk due to high headline inflation. So it's become, the environment has become more difficult, clearly, in the last 4 or 5 months. And hence the need for the policy actions that we took today, hence our resolution to get rates up and ultimately get them to where we think they need to be in coming months.
Yeah,
Thanks, Chair Powell. Edward Lawrence with Fox Business. I want to ask you, you talked about CPI going to 8.6%. The retail sales surprised the market by falling, and then revisions to the previous months were down. Are you hearing from contacts about consumers slowing spending or changing their habits?
So we're, of course, watching very, very.
This is going to be interesting.
And, looking at the retail sale, the big store numbers and all that kind of thing. And so, but I think the fair summary of what we see is you see continuing shifts in consumption. You see some things sales going down, but overall, spending is very strong. The consumer's in really good shape financially. They're spending. There's no sign of a broader slowdown that I can see in the economy. People are talking about it a lot. Consumer confidence is very low. That's probably related to gas prices, and also just stock prices to some extent for other people. But that's what we're seeing. We're not seeing a broad slowdown. We see job growth slowing, but it's still at quite robust levels. We see the economy slowing a bit, but still growth levels, healthy growth levels.
So then as you are raising rates in this economy, how closely are you watching consumer spending, or is there another indicator that you're watching more closely?
It would be hard to watch anything much more closely than we watch consumer spending, but we watch everything. We watch business fixed investment, which actually has softened a bit. We're responsible for watching everything, but
We missed this long entry by literally $4. So this is pretty bad. Hopefully we can still come down here actually, because it's going to be still a good entry in my opinion. It's at 21.3K.
It does appear that the U.S. economy is in a strong position and well positioned to deal with higher interest rates.
By the way, subscribe to the channel if you do like live trading as well.
Are you targeting headline inflation now or core inflation? In other words, how far would you chase oil prices if they keep going up, if that's going to be the component that drives expectations? Would you risk recession for a headline rate if the core rate is holding steady or starting to go down?
So we're responsible for inflation in the law, and inflation means headline inflation. So that's our ultimate goal. We, of course, like all central banks do, look very, very carefully at core inflation because it's a much better predictor, and it's a much better predictor of where inflation is going, and it's also more relevant to our tools. As I mentioned, the parts that don't go into core are mostly outside the scope of our tools, so we look at that. But the current situation is particularly difficult because of what I mentioned about expectations. We can't affect. Really, I mean, the energy prices are set by global commodity prices, and most of food, not all of it, but most food prices are pretty heavily influenced by global commodity prices too. Also other things. So we can't really have much of an effect, but we have to be mindful of the potential effect on inflation expectations from headlines. So it's a very difficult situation to be in, and we can't do much about the difference between the elements that make up headline that are not in core.
Could I just, as a follow-up, get a clarification on the SEP? When the members gave their forecasts, when were they inserted into the record? Were they revised after the CPI or Michigan numbers came out? In other words, does the SEP as we have it now reflect the same factors that led you to go to a 75 basis point move?
The SEP is of one piece. It reflects all of the economic readings. It also reflects the 75 basis point increase. This is important. So people had that in hand when their SEPs were submitted. So in other words, it's not in addition to what's in the SEP. The SEP, everyone's SEP reflects their thinking about this rate increase and what's going forward.
Hi, Victoria Guida from Politico. I wanted to ask about how you're measuring progress, especially since you've now started front-loading rate hikes more. You've talked about how you want to see inflation coming down over a series of reports, and I guess I'm curious whether you think inflation data itself is a really good indicator, or whether you might be concerned that it's a lagging indicator, or that it might send confusing signals, given that, as you've talked about, there are sort of supply and demand aspects. And I guess my question is, do you think that inflation data will tell you when you've gone to where you need to go, or do you just feel like maybe it's better to overshoot than to undershoot?
So I think
Importance. Very important.
The role that we can play, maybe the way to get at it is to say that the role that we can play is around demand, right? So, and we'll be able to see the areas that we can affect are those that are associated with excess demand. And we'll be able to see our effect on, for example, job openings in real time. So, and that would tell us about wages. Wages are not principally responsible for the inflation that we're seeing, but going forward, they would be very important, particularly in the service sector. So, sorry, I'm not sure I'm getting to your question.
My question is inflation data itself the best indicator for when you're getting to where you need to go, or might it lead you to go too far?
There's always a risk of going too far or going not far enough. And it's going to be a very difficult judgment to make, or maybe not. Maybe it'll be really clear. But we're quite mindful of the dangers. But I will say the worst mistake we could make would be to fail, which it's not an option. We have to restore price stability. We really do. Because everything, it's the bedrock of the economy. If you don't have price stability, the economy is really not going to work the way it's supposed to. It won't work for people. Their wages will be being eaten up. So we want to get the job done. This inflation happened relatively recently. We don't think that it's affecting expectations in any kind of fundamental way. We don't think that we're seeing a wage price spiral. We think that the public generally sees us as very likely to be successful in getting inflation down to 2%, and that's critical. It's absolutely key to the whole thing that we sustain that confidence. So that's how we're thinking about it.
Hi, Brian Chung with Yahoo Finance. I just want to expand, I guess, on what you just said now about the general public feeling like you can get this done. When you talk about consumer sentiment being down, household inflation expectations being up.
We're waiting also for a question about crypto.
Does the general feel among American households and also businesses square with your explanation of the economy, given that the description of inflation in the statement didn't change between May and June? Thanks.
So clearly, people don't like inflation a lot, and many people are experiencing it really for the first time, because we haven't had anything like this kind of inflation in 40 years, and it's really something people don't like, and they're experiencing that, and that's showing up in surveys and in all kinds of ways. And we understand that, and we understand the hardship that people are experiencing from high inflation, and we're determined to do what we can to get inflation back down. So that's really what we're saying. Clearly, it's an incredibly unpopular thing, and it's very painful for people. So,
they usually tend to talk about crypto at least once in every meeting. So hopefully, we're still getting a question about it.
Making sure that the public does have confidence that we have the tools and will use them, and they do work to bring inflation back down over time. It will take some time, we think, to get inflation back down, but we will do that.
Chris.
Thank you. Chris Rugaber at Associated Press. You have talked about inflation a few times and mentioned oil prices, China lockdowns. But aside from rises in commodity prices such as gas prices, we're also seeing stickier measures of inflation increasing, such as the Cleveland Fed's median and trimmed mean CPIs. I mean, how persistent do you see those underlying measures of inflation, and how do you expect to, and where do you see those going in the near future?
Yeah. So, as I mentioned, I think in my opening statement, the inflation has started off in quite narrow, very directly pandemic-related areas, and it's spread now broadly across the economy and into the services sector as well. It was really in the goods sector at the beginning. In particular, you're seeing in travel now, if you've flown on a plane lately, planes are very full and plane tickets are very expensive. Some of that will be passed through of energy prices, but so you're experiencing services inflation. Shelter inflation is high. So the question, and you see the Cleveland measure going up, and many other measures are going up. So it's a time when we're not seeing progress, and we want to see progress, and that's really another part of why we did what we did today, and why the SEP looks like it does, is that we see it as appropriate to get the policy rate up to restrictive levels, which would be, in the thinking of the committee, somewhere in the range of 3 to 3.5% by year end, and then after that, you see what the rest of the SEP says. So I hope that's responsive to your question.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Do you still think a softish landing is possible, and how would you define that at this point, considering the revised projections for unemployment, GDP, inflation?
So I think what's in the SEP would certainly meet that test. If you're looking at getting back down to almost a 2% inflation by 2024, and the unemployment rate is still as low as 4.1%, I would call that as meeting that test. Do I still think that we can do that? I do. I don't want to be the handicapper here. That is our objective. And I do think it's possible. Like I said, though, I think that events of the last few months have raised the degree of difficulty, created great challenges. And again, the answer to the question, can we still do it, there's a much bigger chance now that it'll depend on factors that we don't control, which is, fluctuations and spikes in commodity prices could wind up taking that option out of our hands. So we just don't know. But we're focused on, very, very focused on getting inflation back down to 2%, which we think is essential for the benefit of the public, and also to put us on a path back to a sustainably strong labor market like the one we had before the pandemic.
Greg.
Thank you. Greg Robb from MarketWatch. Chair Powell, I was wondering if you could talk a little bit more. Economists are worried that you're kind of hitting the economy with a sledgehammer, and that now there's even more risk of a recession than a 50-50 path of rates. So could you talk a little bit more about that, and what evidence would get you to stop rate hikes and maybe even reverse them?
Sure. So, as I mentioned, financial conditions have tightened over the last 7 months, and that's a good thing, we think. But the federal funds rate, even after this increase, is at 1.6%. So it's hard to see how that is too high of a rate. And even if we did another, we're going to get here by the end of the summer somewhere in the 2s probably. Still, that's still a low rate. So that's not a rate that is calculated to bring a recession on. And by then we'll have seen a whole lot more data. As I mentioned a couple times, the committee's views are around a modestly restrictive stance, which would be in the 3 to 3.5% range by the end of this year. But that's conditioned on that being the appropriate thing to do. If we see data going in a different direction, it'll be reflected in our policy, as you see today. We'll be watching if things go in a direction we don't expect, then we're going to adapt. And I would say this is a highly uncertain environment, extraordinarily uncertain environment. So again, we'll be determined and resolved, but flexible.
Okay, Evan.
Evan Reiser, Market News International. Thank you, Chair Powell. I was wondering if the Fed has initiated a review of the conduct of monetary policy over the last 2 years or so, given the inflation, and will that be shared with the public? And then secondly, given the illiquidity and extraordinary volatility in financial markets, are you concerned that QT will make that worse?
Sorry, what was your question on QT?
Just given the illiquidity and extraordinary volatility in financial markets, whether QT will make things worse.
So, of course, we've been looking, very carefully and hard at why inflation picked up so much more than expected last year and why it proved so persistent. It's hard to overstate the extent of interest we have in that question, morning, noon, and night. So, but you have to understand the context. Really, the context is this: for decades before the pandemic and the reopening, you had a world where inflation was dominated by disinflationary forces such as declining population or aging demographics, let's call it that, globalization enabled by technology, other factors, low productivity. So, and that's how all the models work. Is decades and decades of data. They look at that. It's a very flat Phillips curve work, and the supply shocks tend to be transient, right? So we have now experienced an extraordinary series of shocks, if you think about it. The pandemic, the response, the reopening, inflation, followed by the war in Ukraine, followed by shutdowns in China, the war in Ukraine potentially having effects for years here. So we're aware that a different set of forces are driving the economy. We have been, obviously, for quite a while, that these forces are different. Inflation's behaving differently. And in our thinking, it really is a question of very strong demand, but you couldn't get this kind of inflation without a change on the supply side, which is there for anybody to see, which is these blockages and shortages and people dropping out of the labor force and things like that. So that's how we're looking at it. And we've done a lot of work internally on and thinking about what all that means. The thing is, you don't know whether those forces are, what extent are they going to be sustained? In other words, will we go back to a world that looks a little more like the old world, or are we really going to be in a world where major supply shocks go on and on? The history is you see these waves of supply shocks, as you did in the 70s, and then they go away, and sort of there's a new normal and things settle down. But honestly, we don't know what that's going to be. In the meantime, we have to find price stability in this new world and maximum employment in this new world where clearly inflationary forces you're seeing them everywhere. Again, if you look around the world at where inflation levels are, it's absolutely extraordinary. It's not just here. In fact, we're sort of in the middle of the pack, although I think we have, of course, a different kind of inflation than other people have, and partly because our economy is stronger and more highly recovered. So that's what we're doing. We've done a lot of introspection and work on that. And sorry, on QT, we've communicated really clearly to the markets about what we're going to do there. Markets seem to be okay with it. We're phasing in. Treasury issuance is down quite a lot from where it's been. So I have no reason to think, markets are forward-looking and they see this coming. I have no reason to think it will lead to illiquidity and problems. It seems to be kind of understood and accepted at this point.
Good.
Thanks. For the last question, we'll go to Mark.
Mr. Chairman, Mark Hamrick with Bankrate. Wonder what your assessment is about the outlook for the housing market, given the years-long increase in home prices and now the sharp rise in mortgage rates. And all that, of course, given the heightened sensitivity around the housing market, given the fact that it was a trigger for the great financial crisis over a decade ago. Thank you.
Sure. So rates were very low. A good place to start is that rates were very, very low for quite a while because of the pandemic and the need to do everything we could to support the economy when unemployment was 14% and the true unemployment rate was well higher than that. So, and that was rates are low, and now they're coming back up to more normal or above levels. So in the meantime, while rates were low and while demand was really high, obviously demand for housing changed from wanting to live in urban areas to some extent to living in single-family homes in the suburbs, famously. And so the demand was just suddenly much higher. And low, so we saw prices moving up very, very strongly for the last couple of years. So that changes now, and rates have moved up. We're well aware that mortgage rates have moved up a lot, and you're seeing a changing housing market. We're watching it to see what will happen. How much will it really affect residential investment? Not really sure. How much will it affect housing prices? Not really sure. Obviously we're watching that quite carefully. You would think over time. So there's a tremendous amount of supply in the housing market of unfinished homes, and as those come online, whereas the supply of finished homes, the inventory of finished homes that are for sale is incredibly low, historically low, so that it's still a very tight market. So prices may keep going up for a while, even in a world where rates are up. So it's a complicated situation. We watch it very carefully. I would say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together, and where inflation is down low again, and mortgage rates are low again. So this will be a process whereby we do our work in a way where the housing market settles in a new place, and housing availability and credit availability are at appropriate levels. So, thank you very much.
That's it. So guys, pretty interesting what basically went down here. I missed my Bitcoin long entry by $4. Pretty sad. But basically, they have not been talking about crypto. Pretty interesting meeting is done. There's been definitely some bullish things we've been hearing in this meeting. And first of all, guys, I want to be talking about, I'm going to do a small little giveaway to one of my followers if we smash it up towards 1,000 likes. To anyone who is right now in the chat, I will be giving it away. So make sure to smash up the like button. Of course, also, guys, it would be amazing if you can subscribe to the channel right now if you haven't already. We're also doing some live trading content. And if you didn't saw it, we just missed our entry by $1. And that is, of course, pretty unfortunate. The reason why I was planning to open an entry, basically, we broke a 50-minute downtrend, very long downtrend, also on the 1 hour. We broke above a W structure. It was a very interesting one to be looking at. So, pretty interesting scenario what we're currently seeing playing out here in this market. But yeah, we just missed out on this entry over here. If I would have got entered, I would have already placed my stop loss towards entry. So for anyone who definitely got entered, make sure to check that out here. Also, guys, I've got a large opportunity for everyone out there that is currently interested in trading, because this is a crazy opportunity. If you go towards the link description and you go to BitGet right here, I just got a word out. Everyone who signs up an account through this link right now here and deposit 50 US dollars gets free 50 US dollars on the trading exchange. So 50 US dollars free for grab here for the first 100 people that you do use this link in the description. You can get a free 50 US dollars for trading. If you do use my link description on BitGet, it's the first 100 traders right now, so make sure to check that out. If you're already trading, you can also get a little bit of extra free liquidity to trade with. So check that out in the link description. But yeah, smash up also that like button to a new all-time high, because we're going to pick a winner here live on the chat here, guys. I'm going to be trying to do that. So yeah, what basically happened? This is already a pretty long stream, guys. It's a pretty interesting one. Bitcoin is right now recovering due to the meeting. 75 basis points, and he is of course telling us right now, if next month is going to be once again, let's say the CPI reports to next month are going to be positive, we can expect a very big pump on the market. So we need to see the inflation reports be very low, because right now we're expecting that next month is going to be 50 again here, 50 basis points. So that is going to be pretty okay, because we saw this month 75, and probably next month it's going to be 50 again, going to be good for the markets. So the chat is spamming very hard here. Price targets for the trade. Yeah, what I'm basically trying to be aiming for is the trade. You could what I should be, first of all, approach it, I should be looking to take profits at several levels. The TP1, and I will be setting it up on the screen right now here. I mean, if I would have got entered and I didn't got entered, this is my TP1 zone. My take profit 1, where I take 50% out here. This is going to be my TP2 here, the 3K. So there are basically 2 take profits I will be looking to aim for. Take profit 1 is on 22.7K and take profit 2 is on 24.2K. So basically 2 very important levels to look at right now here, guys. And yeah, right now we just have to wait and see how this market is going to further basically play out from here on. But yeah, as well, we still have that 4-hour bullish divergence. I personally think right now in the imminent short term, due to this meeting being not all too bad here, we're going to probably see a little bit of a bounce here. I am not saying that the bottom is not right now necessarily in for Bitcoin. We can't go ever below this level. I don't think that is the right thing to be saying right now here. However, I do think we're going to get at least a limited short-term bounce here towards the upside for Bitcoin. It looks pretty strong here on the lower time frames. We're reversing a trend right here. And these are the things you want to be looking for, right? You want to be seeing that trend breakout. You want to be seeing the trend retest. And right now, yeah, we're clearly retesting that level, flipping it into support, and it looks to be that we're holding it. And also, we flipped up above this horizontal range over here. So, even a short term on Bitcoin, definitely not looking all too bad here. And of course, after that successful retest, guys, I saw that retest, and for me, it was because I was looking towards the Federal Reserve meeting. I was not able to react right away here because I was planning to enter, of course, on this retest of the support level like here, right here. And if you were watching me and if you were hearing me talking, I set up my limit order over there, and I got missed out of this trade by literally, because I set it up over here, by literally less than $5 here. So this is, of course, pretty unfortunate to see. I just missed out on my entry, and of course, once again, guys, I am trading here live on the streams here. I don't think that many YouTubers or many people on the internet are doing live trades. Subscribe to the channel right now if you do like live trades, because as well, we are making daily because we're making daily trading content. Pretty interesting to see right here. So yeah, we just missed out on an entry. Is this bad? Yes, it's terrible, because I wish I could have got entered, and if I just was not paying so much attention towards the meeting, I was probably getting entered. So sometimes, yeah, you make some mistakes, you learn from it, but yeah, you're going to just take the next trade, right? So it is no problem. We're going to look at the next one. But yeah, markets are already starting to be bouncing from off this point here. Live trades are really cool. Yeah, that's what I like as well. I like to be trading live with you guys out there. And especially, guys, I don't know for how much longer I will be staying live, because I've been live streaming earlier today already. I am live right now here. So I'm probably not going to stick out around very long anymore. But the markets are moving up again. $22,000 US. We're getting a little bit of the pump back up here. Like I told you, 4 hour is forming that bullish divergence. 1 hour as well, guys. This is the 1 hour time frame. Broke the downtrend over here. Pretty strong trend break. And this is, of course, once again, that imminent short-term bounce. We're probably going to get generated over here. Also, if you just purely look at the 1 hour RSI, you can see as well on the 1 hour RSI, we have been starting to be forming that momentum towards the upside, right? I've been warning you guys earlier today on my Telegram Signal group. We've been forming a little bit of a falling wedge over here. We've been squeezing the momentum, positive momentum we've been basically getting generated, right? And we are clearly breaking bullish right now. We're breaking towards the upside. Did it came unexpected? No. Is it necessarily the exact bottom? No, I don't think so. But this is, of course, a clear, good short-term bottom. So it's pretty unfortunate we missed out on our trade. I could have just entered my trade anyway, but I always want to get filled in on my exact level. And if I miss out, it's going to be unfortunate. But look at this, guys. It would have been a perfect retest. But unfortunately, we missed out. So anyone who did got entered, congratulations to you guys out there. But guys, we are very close towards 1K likes here, and I want to real quickly reach this 1,000 likes here, because if we're going to reach 1,000 likes, I will be giving away a very quick $100 US towards one lucky, basically, person that is right now in this chat right now on the stream. So make sure to real quickly smash up that like button, because I want to be staying live till I'm going to give away some money to you guys out there. So smash it up towards 1,000 likes so we can give that free $100 US towards one lucky follower out there right now. So make sure to smash it up. While Bitcoin is pumping towards the upside, I need to reward you guys a little bit here for this small little pump we're currently getting, right? So smash it up right now. It will be absolutely amazing to do this as soon as possible. So yeah, pretty crazy. And of course, like you guys do know, I'm always using randomizers live on the stream, so you're going to right away see live on this stream if you are going to be winning. So smash up the like button right now here, will be cool. And guys, make sure to do it always on every single video, will be just highly appreciated if you can do that. So let me do pump up. Everyone's saying pump up the likes, guys. Yeah, make sure to say it in the chat right now here. Pump up the likes. Of course, at the same time, we've been seeing Cardano, guys. Look at this. Cardano have been performing very well, breaking out right now also on a 1 hour W structure, like you can see over here. Double bottom getting formed in this market. Pretty good structure if you would ask me, right? So you're forming that middle point here. Yeah, we're breaking above the middle point right now. 1 hour is almost confirming this level, and of course that could be, of course, a very, very good position to, of course, increase from here on. But anyways, guys, I'm heading out right now. Cheers. No, just kidding, of course. No, we only have to go 40 more likes, 44 likes till we're going to smash up towards 1,000 likes. I'm of course not going to leave you guys right now here and say no, we didn't reach the 1K likes here, so I'm going to go out here for sure not. So smash up the like button as soon as possible towards that 1,000 level, guys. I think we can easily do it. Say to your friends right now, tell them to join the stream here, because then they also can get an entry here. So that's pretty cool here. So make sure to be there. And oh, the chat is going absolutely well. But Cardano is trading pretty well right now. It's breaking above this horizontal range. And guys, I'm also planning to actually do a pretty cool giveaway for the person that's going to, yeah, basically guess the exact bottom for Bitcoin. I think that's going to be a pretty interesting giveaway to be actually doing right now here. So, yeah, guys, I see it. We reached the insane target of 1,000 likes on this stream here. So, what I will be basically do is pick the winner. And what I want to be saying here is that, of course, you have to be in the chat, guys. Let me know. Do you want me to do this giveaway right now? Let me know in the chat. Say yes or say no. We're going to see it. So guys, I am watching to you guys out there in the chat right now here. Do you want to see a giveaway right now? And should I pick the winner as well live on the stream? Or should I do it tomorrow? Let me know. Should I do it right now? I think we should do it right now. Yes, guys. Oh, look at the chat going. This is absolutely crazy. So, once again, guys, what I'm going to be doing here, and what I think is once again the easiest way to be picking a fair winner, it is once again going to do it through Twitter. So what I'm going to do, guys, is very easy. You do need a Twitter account. Let me pick a very random tweet. Let me just do this tweet. So, guys, I just pinned a tweet in the comment section right now of the live chat. Go towards that tweet, and the only thing you have to do is follow me on Twitter, like that tweet, and retweet the tweet. And I give you guys exactly 3 minutes right now. I'm going to pick the winner very quickly. I give you guys 3 minutes. So what you have to do is go towards this tweet, retweet it, like it, and follow me at RoverCRC, the one that placed the tweet on Twitter, and you've got your entry. And that's the easiest way to make a fair giveaway work right now. Guys, I am going to be picking this winner in exactly 3 minutes from now on. So make sure to go towards this tweet right now here. I'm just looking at the random tweet and I'm thinking, okay, this is the tweet I'm going to use here. So that is going to be the one here. So smash it up, and let's do it, guys. I'm going to be picking the winner in 3 minutes from now on. So make sure to stick in the stream right now. And after that, probably I'm going to wrapping up here. So pretty interesting. Where's the tweet, guys? I pinned it in the. You can either you can do two things. Either you go to @RoverCRC or CryptoRover on Twitter, and you scroll down and to this tweet over here 52 minutes ago, and you can see Bitcoin pumping. This is the tweet. Or you could do another thing, and let's go to the live chat right now, and you can see a pinned comment. And in the pinned comment, you can clearly see the tweet I am talking about. Not there, guys. Then go towards my Twitter @RoverCRC. I will be spamming it. This is my Twitter. It's very simple, guys. It's very simple. And I will also share a link to the tweet once again, guys. It's already pinned. Done. People saying done. That's very nice, guys. Make sure to enter. I see we already got like 200 entries, so that's very nice. I give you guys 2 more minutes. Pin not working on mobile app. Okay, sorry, guys, for everyone who's on mobile app. Pin is apparently not working. I placed it right now in the chat box. So yeah. So guys, I do sometimes these random giveaways, so that's also a cool reason to be in the stream, right? Bitcoin coming down a little bit here, but we didn't get entered. Guys, by the way, I'm going to be canceling my order right now. Why did I do this? I will be setting my order once again back up on the 19,800. Why? That's because that's still the level I am looking to be entering a long position at. But I canceled this order because I basically, I missed out. So I'm going to cancel my order right now. So it's going to be interesting. But let me already load up the giveaway here. So go to a Twitter giveaway picker. Twitter giveaway picker. And guys, if you are going to get picked, sometimes it takes maybe 12 hours before you receive your rewards. Probably I'm going to be sending it tomorrow, but I sent it to my assistant, and my assistant sends it to you. So, you just have to maybe wait maximum 24 hours before you get your reward, your $100. So please be a little bit relaxed. The reward is coming because we don't do fake giveaways. Like you can see, I can clearly go to the previous message. This was the last one from yesterday or 2 days ago or something, and he said what was it, where was it? Anyhow, I sent it over here, guys. Yeah, you can see it. We are not doing fake giveaways or whatsoever. This is also from randomizer. So I see it's right now time to be picking the winner, guys. So I'm going to be place this tweet, load it in here, guys. Like I told you, the requirements, you have to follow me. So if you don't follow Rover CRC, my account, you're not going to be eligible to win. At the same time, you don't need this. Let me continue. We've got 257 entries. We're going to press continue, and we're going to press the begin draw. So guys, who is going to be the winner? I am going to be pressing it right now. The winner of the giveaway is, let me see, guys, I will be showing you guys it. It's Vitrovska. I'm very bad with pronouncing names, but congratulations, you are the lucky winner, my man Vitrovska or whatsoever. You are the lucky winner. I will be sending you a message right away after this stream here, and of course in this message I will be basically tell you you're the lucky winner and that you can send me your Bitcoin address, because you can't message me but I can message you, so I will reach out to you. But anyways, guys, this was already it for today's stream here. This was the giveaway we just did here. Make sure to, of course, slap up that subscribe button right now to the channel. It was an absolutely amazing stream. We learned a lot of stuff once again, what is currently going on in this freaking market. Markets are moving, doing a lot of stuff here. But guys, tomorrow I will be back, of course, with another update video in the beginning of the day here. And of course, if there's going to be any market volatility, I'm going to jump back live as the first one, as always, here on Whole Crypto YouTube. So smash up that bell notification right now. Very important to stay up to date. But anyways, guys, thank you so much for watching towards this amazing new stream. I truly hope you guys like these streams here, because I like making them, and I'm trying to be putting more effort every single stream in towards them. So thank you so much for watching. I'm going to go head out to sleep. Good night.